What is going on, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. Today we got a pretty good ETF right here, and it just IPO'd today, May 11th. And what we have here is a SoFi weekly dividend ETF. Ticker symbol is WKLY, and it's at a price point around $49. And this is a pretty unique ETF because their goal is to pay out weekly dividends. So not quarterly, not monthly, but weekly. And as we know, there aren't even that many monthly dividend ETFs out there. So this one is pretty unique. That's going to be paying you dividends every week. Even though it's not going to be that much, you are still going to get weekly paychecks of dividends for this ETF. And the best thing about weekly dividends is that it's going to be compounding a lot faster as long as you are continuously reinvesting your dividends back into the ETF compared to quarterly or even monthly ETFs. So this is a pretty interesting ETF because we're getting weekly dividends. It's something we've never seen before. There's actually only one other ETF that does this, and it's also an ETF by SoFi, and we will be going into that in the later of this video. But for now, we're going to be checking out WKLY. So the aim of this is to attract investors because they're going to be paying out frequent dividends every 7 days, which most people really like. They don't want to wait 3 months. They don't want to wait every month to receive their dividends. They want it now. They want it weekly. So this is going to attract a lot of investors, and I think that because this dividend ETF is going to be so attractive, we can see some slow capital appreciation over the upcoming years. And it's a great buy for if you have a risky portfolio. It's a very conservative approach because you're not going to have that huge a growth in capital appreciation, but you are going to be collecting those weekly dividend checks every week, and that's going to be the main factor growing your portfolio. So SoFi also has another ETF for weekly income, ticker symbol Tgif, and this is similar to WKLY because it's also paying out dividends weekly. But the difference is that we're going to be seeing a little bit more in capital appreciation. And as you can see here, this is a pretty new ETF, but it has been released of October 2020. But we're going to see a little more capital appreciation than WKLY because this is an actively managed ETF, whereas the other one, this one, the WKLY, is passively managed, and they're going to be focusing on dividend stocks in their holdings. So this one, Tgif, focuses on short-term investments. They're going to be actively trading, and they also are going to be focusing on bonds. So because this is actively managed, it's going to be a lot more work. We're going to see a little bit higher returns in the ETF price, but we're also going to be charged a little bit more on the expense ratio because actively managed funds do have a higher expense ratio, and I think the expense ratio is going to be around 0.50% annually. So these two ETFs are both going to be pretty good. It depends what you want. Do you want an actively managed ETF or do you want a passively managed ETF? They both have their trade-offs, but they're overall pretty similar. So that's about it for this video. If it helped you in any way, please leave a like, comment down below if you want to see any more type of videos like these, and make sure to subscribe if you are new here to the channel. It helps me out a lot. Thanks for watching.